the Lai Hong using its fixed asset to generate sale. So Lai Hong show a declining trend for the fixed asset turnover for 3 consecutive years. And the Lai Hong what Lai Hong should do is to identify any non-productive fixed asset that is not contribute to generate company profit. So I guess that's all for me. Let's move on to Miss Ain for the next presenter.
Slide. Okay. All right. Bismillahirrahmanirrahim. Assalamualaikum. Good morning, Abid to Dr. Azina binti Rahim. My name is Nansha Rosli and I will be presenting on financial statement analysis of Lai Hong Berhad. Next. Okay. This is the overview list of the ratio that falls under market profitability ratio and market strength. Next. Okay, the net profit margin of Lai Hong Berhad shows an unchanged trend from 2018 to 2019, as well as showing significant decrease in 2020. The constant percentage in net profit margin indicates that the firm are at break-even point where the firm is not making profit or receive loss. For instance, the dramatic decline indicates that the firm are making a less money per ringgit of sales. This can be a result of lower sales or higher costs and even management inefficiencies. Next. The return on asset measured from 2018 to 2019 decreased and subsequent downturn in 2020 as well. This indicates that Lai Hong Berhad might have overinvested its asset that leads to failure producing revenue growth. Next, on the return on equity ratio is an instrument that measure the return on both common and preferred stockholders. The ROE shown a decrease in its percentage from 2018 to 2019 also depicts a dramatic decline from 2019 to 2020. Based from the percentage derived, it shows that they are becoming less efficient at creating profit and increasing its shareholders' value, and also means that Lai Hong Berhad increased its debts. Next. The graph shows the total asset turnover. In 2018 and 2019, Lai Hong Berhad has a decrease in times, which implies that the firm was not efficiently employ its assets in order for generating sales. Therefore, to ensure that the asset utilized efficiently, and needs to analyze how assets are being used and find ways on to improve it. Whilst on 2019 to 2020 shows a slight decrease of times of its total asset turnover that shows they can operate and function well, even in hardly any two assets. Next. The operating income margin measures the percentage of money that is left after excluding cost of goods sold and operating expenses from the net revenue. The operating income deteriorate from 2018 to 2019. In the subsequent years, also appears to be dramatic fall between 2019 to 2020 as well. Lower operating income margin indicates that higher financial risk for Lai Hong Berhad and the lack ability to its fixed costs. Next, Lai Hong Berhad price per earning ratio. Okay, it shows a fluctuate trend for 3 consecutive years. In 2018 and 2019, there is increase in ratio. However, from 2019 to 2020, the ratio dropped significantly. When the price increased, it shows that Lai Hong Berhad managed to grow its stocks. This indicates a positive future performance, and investors have high expectation for future earning growth and willing to pay more for Lai Hong Berhad stock. The downside of these growth stock are often higher in volatility, while lower ratio for Lai Hong Berhad in 2020 shows that they are undervalued because Lai Hong Berhad stock price trade low relative to its fundamental. Next. Lai Hong Berhad's dividend yield has increased tremendously within 3 consecutive years. Since Lai Hong Berhad are among utility and customer staple industries over having a higher dividend yield, the increment shows a good dividend yield. However, it varies against general market condition. As far as concerned, the yield are considered adequate. Next. on the book value per share, it implies that the amount of shareholders' equity relates to each share of outstanding common share. If the amount of book value per share exceeds the market value per share, it shows that Lê Hồng Berhad stocks is undervalued. It reveals that the comparison between firm's book value and market price. In 3 years' time, the market price of Lê Hồng Berhad is lower than the book value per share. Thus, this might be due to the company use of income to buy back share. That is all from me. Thank you. Next presenter.
Doctor, you could see my slide. Sorry. Okay, doctor, can you see my slide? Hello?
Boleh.
Boleh, Okay.
Boleh.
Okay, I start. Okay, Assalamualaikum warahmatullahi wabarakatuh. Okay, my name is Muhammad Nizam bin Mat Said. Okay, today I will Okay, my name is Muhammad Nizam bin Mat Said. Okay, today I will present about extended financial analysis and leverage ratio for Lê Hồng Berhad. Okay, first we go to the leverage ratio. Okay, for the leverage ratio, we have debt ratio and also debt to equity ratio. Okay, debt ratio measures the extent of company's leverage. Based on the graph, it is good sign that Lê Hồng Berhad did a good control on its debt position to cover their long-term liabilities. For 2018, they had increased 0.51 on debt ratio, while 2019 stated at 0.48. This is because the decrease of its total liabilities with increasing amount of total assets, but the ratio hit back at 0.51 in 2020. Overall, it's still less risky because under 1.0 ratio. For debt to equity ratio, it indicates the ability of the company to pay its long-term debt and how well the creditors are protected in the case of insolvency. The graph shows debt to equity ratio significantly high risk for 2018 at 1.06, meanwhile 2019 better position at 0.92, supported with significant reduce in current liabilities. But it happened to be risky again in 2020 when the ratio is 1.06. For the time interest earned measures the income that cover interest expenses in future. 2018, Lê Hồng Berhad has better time interest earned ratio at 5.54 times compared to 2019 and 2020 at 3.44 and 2.38 times respectively. We could see the trend of finance costs increase every year with declining profit before tax and interest every year too. Overall, Lê Hồng still in good situation to serve their interest expenses, but the ability has declined substantially every year. Okay, now we go to the extended financial analysis. In vertical analysis, shows their net profit plummeted significantly in 2020, even their net sales increased from 2019. It is aligned with increasing costs of their finished goods and operating expenses. As report, 2019 shows decline in their net revenue due to catastrophic event. In addition, the asset shows fluctuation figures significantly in property, plant, and equipment due to addition and disposal activities. Number two, biological assets because of newly adopted MFRS 141. Number three, trade receivables because of new credit policy. And number four, due to subsidiary companies. For liabilities, they should manage on loans and borrowings because it may cause domino effects in future. Lastly, total equity 2019 shows significant high percentage resulted by issuance new ordinary shares via warrants and share issuance scheme. For the ratios, we go to the liquidity ratio first. Okay, it present the year 2090 indicates they are not in the strong ability to pay off their short-term debts. Or efficiency ratio is a better performance by issuer with ability to turn its account receivable into cash resulted from creating risk management policy to safeguard their account receivables. Using 5-4 method, they should ensure inventory turnover is always high by fully utilize their fixed asset to generate sales. In leverage ratios, the company policy on debt to equity ratio calculation resulted to 0.59 times, but our calculation resulted to 1.06 times for the year of 2020. Profitability ratio indicates they is not effective in turning revenue into actual profits. The company seems also overinvested on their assets. This situation is not aligned with the objective to maximize the shareholders' wealth while referring to the ROE. Okay, my closing is Lei Hong Berhad still show a good performance in their share market for the group base. Diversification investment in its subsidiaries help Lei Hong Berhad Group to be maintained as one of the main player in industry. Thank you. Pass to the next presenter, Mr. Zaimang.
Assalamualaikum, Doctor. Can you see my slide?
Yes.
Okay. Thank you, Doctor. Assalamualaikum warahmatullahi wabarakatuh. My name is Zaiman Mat Jamal. I will briefly discuss about industry analysis and the future prospects. My team chose Porter's 5 process model. We will narrow focus on the one of the Lei Hong business which are contribute 70% of their revenues. First, supply the chicken eggs we call layer and supply the chicken meat we call a broiler. After the detailed analysis, we can conclude the buyer power, the trade of supply power of chicken feeds, the substitute product, and the competitors contribute the high process to the Lei Hong Berhad business. It may adverse impact for the revenues and profitability in the future. For the extended analysis, first, supply and demand. As we know, pandemic COVID-19 give the impact to consumption pattern and demand. The demand of the layer and broiler for the 2020 is reduced. They contribute the layer oversupply almost 40.51% and broiler oversupply over 30.52%. Second, the expected market share. Lei Hong Berhad is not the single playmaker in the layer and broiler business. As we see in the table 2, QL Resources Berhad and Lei Hong Berhad International contribute almost 49% in the market share. For the broiler business, Lei Hong International Berhad control a quarter in the market share. When the oversupply of layer and broiler product, it contribute the price of the product will reduce. Consequently, the profit of the Lei Hong Berhad also will reduce. The strong existing customer like QL Berhad, Lei Hong Hub, QL Resources Berhad, Lei Hong Hub International Berhad may impact their market share. For the future prospect. Overview, Malaysian GDP marginally declined 0.5% in the first quarter of 2021, continues its recovery from decrease of 33.4% in the preceding quarter. However, Lei Hong Berhad still may sustain in their business for the certain circumstances. First, during MCO COVID-19 pandemic, the imposition of MCO may enhance the revenues from the frozen pre-cooked items such as nuggets, frankfurters, and the fried chicken. As we know, chicken product is essential service. Therefore, Lei Hong allowed to operate with conformity to strict SOP. Means the company still can make a business. For the 2021 and 2022, Lei Hong Berhad may rely for the technology changes, credit system within industries, credit term of the company, COVID-19 pandemic, and Olympic 2021 in Japan. For the growth strategy, we look the conclusion on the financial analysis first. Lê Hồng Berhad facing net profit reducing significantly in 2020 from 2019. The liquidity ratio of the present year indicate not in the strong ability to pay off their short-term debts. However, the company still may survive for 2021 and 2022 because the business of a layer and broiler are essential for the Malaysian market. We look the conclusion for an industry analysis. Based on the trend of the business in the livestock industry, Lê Hồng Berhad still can manage their competitors. The company may improve their operation with the latest technology and future market for the demand of the frozen pre-cooked items. Therefore, the recommendation, the company Lê Hồng Berhad may have a good strategic partner with NHF Japan. NHF Japan partnership may boost their market segmentation to middle class customer in the future. As we know, they are well brand in the Nutri Plus product. Therefore, the company can export their product during the Olympic 2022 in Japan and may explore the Japan market. The expansion of plant may increase of their production and may fully utilize their demand from NHF Japan manufacturing. In conclusion, the company of Lê Hồng Berhad can manage their competitor and survive in the future market. That's all. Thank you. That's all, Doctor. Thank you.
Okay, just on time, 4 minutes, 43 seconds. Okay. Saya ada jadi penjaga masa sendiri ya. Okay, so thank you for your presentation. Alright, so I have a question. Maybe anybody can answer the question. Okay, based on your presentation just now, we can see that the company performance is not so good, right? The financial, poor financial health and so on, right? Okay, now, what is your comment or you can give any idea the challenges that might be faced by the company to sustain, especially as we know the performance of the company badly affected due to the pandemic. But actually, the as what mentioned by Zamal at the end of the presentation, this is one of the essential company, right? But so can you give any idea the challenges that might be faced by the company to sustain in the business, especially in the era of pandemic? So anybody can answer.
Okay, may I answer first? Okay, for your information, Doctor, the company expand more their plan for the 2019 and 2020 because they may increase their production and to be one of the player in their market share in the market. But however, we strengthen the facts. We can conclude the company still can survive because first essential market and because the strategic partner with NHF Japan. NHF Japan one of the first company in the Japan and the fourth largest in the world in the technology of the chicken product. Therefore, as we know, the 2022 next year will Olympic the event of Olympic will exercise and at Japan. So that product Nutri Plus will be a major contribute of their revenue in the future. So we confident that company still can survive to in the future because the strategic partner with the NHF Japan regarding in technology and the market share in the other world. Maybe my friend can add up if have a time.
Okay.
Okay, I want to add that Lê Hồng Berhad, if you can see by the ratio, yes, it's maybe poor performance on 2019 and 2020, but actually they are investing at their rapid expansion for this 2 or 3 years in present. So we could see the debt could be higher, but it is actually an capital investment for the company for make future development for a better future for them. one thing I want to highlight is about the leverage ratio, which is from our side, we calculate that their leverage, their debt to equity ratio is 1.06, which is not in good health. But actually, the company policy calculation ratio is 0.59 times only. It is because they only take the only debt, and they uh, deduct with the cash and bank balance. After that, they divide by the shareholders equity, so they get lower than 1.0 times, which is indicates good health for them lah. Okay, for them. Okay. And one thing that's I want to highlight is in the annual report, the management says that their primary objective in capital management are to maximize value by optimizing its capital structure and enhancing capital efficiency while maintaining its level of liquidity. So I think for the future, there will a good future for them if they maintain their liquidity and also their rapid expansion for the better growth. Thank you.
Okay, so thank you for your idea and comment. So I think that's all. And thank you for your presentation.
Thank you,
Okay.
Doctor. All right.
Thank you,
Assalamualaikum.
Assalamualaikum.
Thank you, Dr.